Hey there, folks. Welcome to another market internal review for September 29th, 2023. So I'm recording this on Sunday, as I typically do for the Friday sessions. This concludes the end of the month of September, and what a wild month it was. Starting off on Friday, we had a $3 gap up. We did see some buying the Thursday on the 28th here, prior to the end of the last day of this month here, and the range that we went up was, I think, about $5. It's a good buy. It's a good buy. Gave me some hope for potentially a little bit more upside to end out September, although I had mentioned that was mostly looking for slight upside and then potentially some chop. So mostly concluded the month with that theme. Friday starting at that $3 gap high and opened and dumped right within the range to start out. We had a couple of attempts to break back out. I had called out on Twitter or X that potentially if we could break out here, then we could see a trending day. So part of the reason of that was because the NYSE ad was over 1,500. I think we were around 1,700. Okay, 1,800 to start out, but you can see we're plummeting. And right here, I think was real close to where I had mentioned we need to have this breakout back into this range in order to see a potential trending day. So that aligns decently with a trending day. Usually happens early in the morning session. We did not break this gap, and we eventually started to break down and test previous day high. I think it was early 10 o'clock, 10:05, somewhere around there. I basically said that I'm most interested in 430 or 428.3. So a couple reasons for that. One, real close to the gap fill, but it's also previous this Thursday's ending TWAP price here. So you see price had a nice range right on this TWAP. We flirted quite a lot with it also, and it was slightly above Wednesday's high price. So anytime we start forming a range towards the end of the day around that TWAP and we really oscillate back within that first deviation, we're still kind of above the previous day high. This is just a particular thing I notice as this little range kind of becomes a magnet for next day's price. And with such a large gap, we could not close back above it. It's more probability that we would at least fill half of the gap, if not the full gap. So in that case, we filled the half quite fast, and then we did kind of flirt back into first standard deviation, only to give that up with this big double engulf down. And we lost the mid gap, we lost first standard deviation, we lost previous day's high price. So that's a good setup for continued downside. And also, not sure why this is, but the current day, if it opens up extended within the TWAP range from previous day, so these dotted lines here, it almost seems inevitable. Obviously, nothing is guaranteed, but it almost seems inevitable that we'll eventually test this TWAP price from previous session, perhaps even the full range. So in this case, ironically, the third standard deviation low, almost to the cent, is previous day low price right here. So it's amazing, the alignment, but yeah, so basically that's what I was calling out, is somewhere around here. Now they did bring that to fruition before 1 o'clock. We ultimately did break lower. We rest right around here on this second deviation low, this area down here, and we have some fake breaks above, definitely fill in this area, and we reject Previous TWAP right here at 3, we get a nice mercy squeeze signal. We finally have that solid cross down. They bring it back down here only to try to bring it right back into TWAP. So it just gets really messy towards the end of the day. Certainly not anything that I would be super thrilled with trading unless I was already in from over here. A couple things to note: we had pretty strong trend balance most of the day. There was a couple blocks where we had nothing, but most of the trend balance we do have, as is somewhat typical here lately, somewhat of a channel. This one was not as clean as some of the ones we've had, and it also is somewhat divergent to the location of ad, the price, and the volume of the stock exchange. They're green, but you can see these trends are flipping quite often, and this definitely was a little bit misaligned, I would say. But yeah, so mostly decent action as far as if you were short from around the time of my tweet, you definitely secured something around here. You're using TWAP for your trailing stop. You definitely were totally fine to hold this whole day if that's how you trade. And we definitely hit almost the entire internal range. We rejected right at open the third deviation high from Thursday, and the only thing we didn't tag was the third deviation low from Thursday. But otherwise, we hit every one of these price target levels. So pretty crazy. But a couple things to look at on ad itself. So at 10:02, is right where ad was rejecting that 1500 line. That's why these levels are so important as far as I'm concerned. And then you see we're bouncing off the 200, kind of oscillating around it. We finally lose it at 11:28, and then we never really trade back. We do have a bounce here at midpoint at 118. So if we look at 11:28, so here's that TWAP retest, breakdown of first standard deviation low. So that's a very good entry for me, anyways, for how I trade. Then what did I say? 118, somewhere around there. So that would have been right about here. And then that's where all that noise comes in. So very good alignment. It's always important to take a look at the ad chart, or if you know your values, you know what 0 is, you know what 1500 is. Those are very good things to keep in mind. That's why I show them down here on MIT, is so that you know when 1500 is around, because you can expect some erratic price movement on SPY if there's good alignment. Same thing with 0 point. So if we zoom back here, odds at 57, there's 5, there's 23, there's negative 49, 51, 25. Now we're back over 100, 122. So anyway, so that's where you see, okay, we've crossed below 0. New York Stock Exchange is effectively at balance, and that can give you a good indication of what to expect from price. Also, a couple things: when we hit 0, notice all of the extreme tick closures and tons of bearish tick. The average closures, even that white line, is at negative almost 900. That's pretty incredible. We've also been making lower lows on the average closures the whole day up to that point, so that's actually really clean. I did not notice the lower lows intraday. That's pretty incredible, actually. But then we also have a mercy oversold indication right around here, so just tons of alignment. I mean, we know that tick is also showing us oversold, but it's mercy is showing us oversold with all of the internals combined versus just tick here on this guy showing oversold. So this is really nuts. That's I kind of wish I would have seen that intraday. Although at that point, trying to go long, you may have gotten a good scalp or something. But it's not much else to do with that information other than hopefully, if you were short from above, you were knowing that at this point it's probably a great time to manage your risk a little tighter. So Looking at VIX, so VIX we hit a low at 10 o'clock. That's roughly about where SPY is rejecting the daily gap high. And let's see, by that 1:18ish time, that's about where we reached by VIX's high a day, 17 and change. We did get a little bit higher there, but yeah, not quite 18. We had reached 19.5 this past Wednesday. So 20 may still be in store, but stay tuned on that, I suppose. As far as trend, there's that balance. We had multiple attempts to break out into the strong, kind of oversold, potentially bear zone. Didn't happen. So it was just definitely more of a slower melt type day. Then, of course, another very great indication here on Vold is to look at that 200 SMA and see where price is rejecting. Now, this is not as clean as other days, but we do have a real strong rejection right here at the end of the day around 350. Then you can see a couple more bars print in extended hours where we are definitely in that bear zone, but nothing like what we have been seeing. So there's tick with the accumulation on the upside. We have plenty of balanced breaks though. So there's that trend balance. We're seeing it very clearly here on tick. Then we get that extreme bear print that we saw right around that 118 time. And then the accumulation definitely flips more towards downside. Let's go flip over here towards the end of the month. Data for the monthly TWAP. So monthly TWAP on the New York Composite. Where did we end? We ended right smack dab at the lowest point of August's TWAP range here. Also previous day low. We did break below for a short while, but there's that 118 time. That's right where New York Composite's hitting previous low of day. Also the lowest point of August's TWAP range. So very interesting to see that. We did save it. We had been below it earlier this past week at Wednesday. We spent all that time Thursday buying, and we reclaimed inside the range. And we had even broken into first standard deviation low. All the indexes did roughly the same thing. So Wednesday to Thursday, we see the buying. SPY even was able to reclaim the lowest point on the monthly TWAP ranges, but definitely choppy around that area. And then Friday, the daily, you almost can't make this up, the daily gap low for SPY, that $3 gap up, the daily gap low was the monthly TWAP level. It's right there. And right where we reject, that might actually be to the wick high there. Yes. So the high is 428.47 on that candle, and the tick level, the TWAP level is 428.47. So very insane. That one is a cent off. See this TWAP level here acting as resistance, and let's see. Technically, SPY did close outside of the August TWAP ranges. We, of course, will have new ones coming into October here. So the Qs, we tried to break up higher. Recall, if you watch the other videos from the week prior, Qs was the last thing kind of holding us, as far as I was concerned, some kind of hope for a bounce, and they did never break the August TWAP ranges. We bounced right on the second to last one on Wednesday. Then we get that buy, and Qs was a lot stronger with the first deviation low on the month being fully reclaimed, ripped through previous day high, bounced on it, and then we also had a $3.50 gap on the Qs, but they did spend, just like SPY, pretty much the whole day just losing some of that progress. They did rest right on a little above TWAP from Thursday and stayed within this gap. Dow, definitely one of the weaker ones. They did not reclaim first deviation high on that Thursday. They did reclaim the August TWAP range, the lowest price that we had available for them, But come Friday, they gave all that back, and we're struggling to keep previous day low here, which you can see. So Russ had much a similar story. Wednesday, near the lows, broke below the lowest point of August TWAP range. Thursday, broke back in, decently within the first deviation low for monthly TWAP. And come Friday, they gapped pretty high up in here. I mean, at one point, when I was still thinking trending up day, I was actually considering, maybe most of the indices would cross above monthly TWAP, but we can see we just continue to drag that down and build a lower range, sadly, to represent September as we go into October. They did stay within above the monthly TWAP ranges from August, right there towards the end of the day. They did lose the gap, but they did keep the previous day low price. All right, so as far as the spiders go, SPY in general here, we've got a couple interesting things to note. So as far as my trend line went, I think overall it was pretty accurate. Like I had mentioned, I expected us to come slightly up from not this last Friday, but Friday before, and then proceed to make some lows and intermediate lows and highs, and then find some buy and come back up. I did not expect a whole heck of a lot. I was expecting a test of 10-day SMA, and that mostly is what we got. So the bummer is we didn't quite come to 10-day SMA. We hit let's see, the high here was 431.85, and the 10 days 432.75. As far as volume leaders go for the spiders, so finance is at 52 million, which is quite large. Utilities is at 22, and energy was at 24. SPY itself had quite the massive day from a volume standpoint. 115 million volume. So that's actually quite substantial for SPY. But this is a pretty big range here. Spent a lot of the day selling. Growth could not break out of that 25% above 20 and actually close back down. So that's not quite the best sign that I was hoping for. We're sitting at 13% essentially. And a couple other things to note. We're still dragging the 10 down. We're dragging the 20 down. 50 has been coming down since, September 20th. But you'll notice this monthly trend line, we effectively did bounce on Wednesday. We saw, a decent buy Thursday, but we did close back into that range, about 50% of this range. So, depending on what happens coming up with government shutdown and all the BS that surrounds that, what I'm kind of expecting, and futures market could make this interesting, but I'm almost expecting a little bit of chop this week, but eventually have us come up and having us come up and test somewhere around the 100 SMA and the 20 SMA. I think it's going to be kind of nasty. So for the first couple days in October, I think we're going to see a lot of weird kind of 20 SMA, 10 SMA kind of weird wiggle. I think it's going to make a mess out of my chart, kind of like what we had back here, all these candles trapped in between the 20 and 10. So, something like this. Down here is kind of what I'm thinking, something like this. And that's just because of what's trailing in on these SMAs and just kind of where we're at. But energy did start to have a breakout per RSI, but that ended pretty fast. And pretty much all these guys are cooked down here by the beginning of this week, certainly by Wednesday. And we did start to see somewhat of a bounce. So I think the government shutdown thing is a little bit more of a, FUD. It does appear that things were passed such that they're not going to be shut down, and we have like a 45-day extension, so we'll see. Yeah, I mean, Friday ended up being kind of a nothing burger with The market internals, we're pretty much mid on ad, and I'm going to say mid on volume as far as, until these last little prints, but that's not really extreme enough. So I'm going to come in with mostly a neutral bias, but given that we did pretty much end at the lows of August's range by the end of September, I'm going to start looking for opportunities, I guess is what I'll say, and see it cautiously if we can find some positive seasonality. That's what I got, folks. Hope you did well this month, this past week. Hope you had a great weekend. And as always, thanks for watching. Happy trading.